Well, hello, everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong. I'm a coach with Charles Schwab and senior manager, and delighted to be here with you today, along with Mr. Kevin Horner, who, along with Ben Watson, has been spending some time on the road at our live events this year, and it has been absolutely fantastic. I'm going to talk about the upcoming events in just a minute, but if you've never been to an in-person event, or a live event, man, you are missing out, my friends. So what are we going to talk about today? Well, today, I've kind of gone back and forth between some different topics. I thought, well, let's say we want to place some trades because we're going out for the rest of the day and it's just before this Fed announcement. And how might that influence the markets? I looked at incomplete patterns and, placing conditional orders. So we're going to do a little bit of that, what we just talked about, but we're going to look at resistance breakouts and how we might change, how we might trade those types of price patterns. And we're going to also look at where you can get easy access to information like stock upgrades when you see a price pattern, where we have a resistance type breakout, so we've got a whole lot to cover today in our 45 minutes together. If you are not following Kevin and I on X, at Barbara Armstrong and at Kevin Horner CS, Barbara Armstrong CS, you are, consider yourself cordially invited to follow us. We'd love to have you on board. Know that options carry a high level of risk, and we're looking at doing 3 or 4 different types of trades, depending on how many positions we actually get into today, a stock trade, and then maybe 3 different options trades. So we're looking at different types of entries based on a price pattern, and then why one might choose one trading strategy over another. Know that everything we talk about in this class is for general information purposes only, not to be construed as a recommendation to trade any particular stock or strategy. And know that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. Looks like, smells like, feels like real money, but it's not. One of the nuances or differences is that short options will never be assigned early in Paper Money, but that can happen in a live account. Have I ever seen it happen? Yes, I have. Okay, so one quick announcement. We're going to have a very quick look at the market. So Ben Watson and Kevin today spent 45 minutes having an in-depth look at what's going on in the markets. They do a beautiful job on that every Wednesday morning. So if you want an in-depth market overview, check that out. It'll be available in the archives. We're going to focus on placing new trades today, but we'll discuss trade management as well. Now, this Friday, Kevin and I and Ben and a host of others, we're flying people in from all over the country. We'll be rendezvousing at the Gaylord Texan Hotel at what we anticipate being the largest in-person event we've ever had. These market drives, they go from what's happening globally in the markets, what's happening with tariffs, what's happening with sectors. So from global market perspective down to individual stocks. These are one-day events. We'll have the coffee on. We'll have breakfast ready. We'll provide lunch, a great reception at the end of the day. They are free for you to attend. We'll even pick up the parking if there's a parking charge. So, be there, be square. If you live within driving distance of the Dallas area, it's not too late to join us. 2 weeks later, we'll be in Chicago. Doing the same kind of thing all over again at the Renaissance in the Schaumburg area. And registration for both of these is still open, along with a 2-day event coming up in Orlando. So if you've never been to one of these in-person events, I encourage you to check it out. It's a chance to link arms with other people that are, trying to take charge of their financial destiny as you are. I made friends as a client that I still have to this day at those events. So a quick and dirty as a market overview. Today, we're expecting the Fed announcement just after this class wraps up. So that's why I said, do we talk about, what to do before an announcement like this? And that will certainly flavor our conversation. But, we hit a new intraday high on the S&P yesterday. Hard to look at this trend as anything other than bullish, up almost 12% year to date. How about our tech-heavy non-financial index? That hit a new intraday all-time high on the market yesterday as well, and is up close to 14% year to date. So, just pulling back a smidge today, but that's a live candle. Who knows where we'll be by the end of the day. The Russell, actually, our small cap, so 2,000 of the biggest of the small boys. Yeah, and this one up 0.75% today, not at an all-time high, but within a stone's throw of it. The all-time high on this index, I think, is that 2466. Let's go back 5 years. It's at 2466. This is on a weekly chart. And the close that week was 2434. And where are we now? We're at 2420. You don't even have to be like an NFL level quarterback to hit that, from where we are now. And this has actually been the strongest index in the last 3 months. So there's that. And then the Dow, I know a lot of people talk about the Dow, and I'm going to do a little video on like some interesting facts about the Dow next week. But the Dow 30, it's called the Dow Jones Industrial Index, and they talk about the Dow Jones Industrial Average. It's really a pretty complicated mathematical thing, and this index is based on, the price of the stock, not its market cap, which is different. But, this hit a new all-time high within the last week as well, up 8%. So it's in, I think it's in fourth place. I forget what the Russell was. Where are we? Well, up 8.6. So those two are a little bit behind the NASDAQ and the S&P, but all around things are looking pretty good. And then our volatility index is sitting at 16.5, up a little bit, but not a lot. And given that, we have a Fed announcement coming, I think a lot of people are thinking that announcement is kind of in the bag. Everybody's expecting it to be 0.25%. And if it's either 0 or 0.5%, I think we'll see a much bigger reaction from the market. But my crystal ball is not working, so we'll just have to wait and see. Yeah. And so Jay said that he went to his first in-person event last weekend in DC. I'm a little jealous that you were there. I would have loved to be in DC, but yeah, the Barb 2.0 project is going on the road for the first time this weekend, and I'm excited to be there. Okay, so let's look at our first opportunity, and let's look at Netflix. Now, if you watch any type of financial news, what are we hearing today? Well, we're hearing that there was an upgrade. And here's a stock, it's up 35% year to date. So certainly outperforming all the major indices. It is in the communications sector, and they're really an industry leader. And you can come down here and look at the 5-year trend. It's gone from sales per share from 55 to 88 over the last 5 years. Now, is this a guarantee that that's going to continue? Absolutely not. In year over year, like last year, 5 years ago, earnings per share were at $6 a share. It's gone to almost 20 in 2024, a 39% increase in 1 year. So pretty solid, fundamental results, some might argue. But if we were looking at this, you might say, well, Barb, did you notice? This is a $1,200 stock. So if we had a smaller account, and I do often treat this as a companion class to the trading a smaller account class that we do Mondays and Fridays. So if you couldn't afford to add this as a stock position, but wanted to take advantage to this diagonal resistance breakout where it broke out and came back and retested and then is moving up today. And if we come to the news, and if you come to watch lists, and then you come down to lovers and losers, here are analyst downgrades and upgrades. And it will tell you what has been upgraded or downgraded today. And so we can see Netflix was upgraded. If we come over here, you know, we can see that Loop Capital has raised their price target to $13.50. It's currently sitting at $12.2288. But could we come out to October and say, well, you know what, I may not want to add stock now. Could we add a $5,000 position? We could buy 4 shares of stock. You know, and there's nothing wrong with buying a few shares of something. You don't have to buy 100 shares. But if we said, you know, we're just kind of looking to generate some shorter term returns or generate some income, could we buy this 12.20 strike? Well, it's $43.25 a share. So that's a $4,300 position. In a smaller account, we don't want to risk in our account more than $500. So could we do the 12.20 and the 12.25, which means this has to go up by $2 and stay above that for us to have our max return on this trade. And at 255, how much could we potentially make? Or at 248. So we're risking 248 to potentially make 252. But our guideline in this class, and if you go to the trade management mini sessions, there's a example trading plan for a long call vertical. You know, our goal is to make a 50% return. And you'd say, well, that's $3.90. Like, yeah, so we're making $1.30, but we're leaving $1.10 on the table. Yes, we are. And, you know, you don't have to do that. But what I found when I started was that I wanted to get every scrump, every bit of that return I could get. And you know how often I got it? Almost never. And so I said, well, what if I wasn't so greedy? What if I went for a 50% return? And the next time you're out with your friends, maybe say, you know, this woman, like, I don't know how she still has a job, because she suggested I place a trade that I be in for maybe 30 days. And I'm not recommending that you place this, but just as a trading strategy, because, you know, what I did when I was trying to learn is I would place every trade the coach did in paper money. And if I didn't think the trade was going to work out for whatever reason, I'd say, I wouldn't have actually placed this trade, just following along. And, you know, to see if my intuition was right or not. But we're going to do 2 of these, and we are going to put in our exit at 370. We'll call it 378. 375 if it's at 250 would be 50%. 378. It's about 50%. Well, now it's 263. So it's 390. We're live in the market. Good till canceled. And so, you know, when we look at this and we say, well, here's a $1,200 stock, what is our theoretical max loss? Is $526. Well, that's a hit we could afford to take. And you know, if we're correct in our analysis and our expectation that this stock might continue to the upside, we have the potential to make, here it says $474, but we're saying, hey, if we can make like 260, we'll be happy campers. So we're going to put that in the long call vertical bucket. And if you want to see an example trading plan, you know, you can go ahead. So Andy is saying, like, you know, why not a short put vertical? And, you know, good question. So when we come back and we look at this, could we do a short put vertical? And the answer is, of course we could. Now, where might you want to put your strikes? Well, you might say, hey, 3 days ago, this came down and hit 1173. So I kind of want to be maybe 1170. I'd want to be below this diagonal resistance line, which appears to be acting as support because it broke through, came back to retest. So could I come out here, same time frame, to this 1170 and get enough premium? And what's the advantage of, whoa, we don't need quite that many. Just wanted 20. So could we come out? Well, I guess I need 25. Could we, get enough premium? And the short put vertical is less directional. In other words, if it stays above 1170, we have a trade, an example trade here that might be profitable. Where with the long call vertical, it has to move above 1225 and stay there. Now this one hasn't filled. Where's our Netflix? It's saying, oh, now it wants 267. Well, it's heading in the right direction. Fortunately, we wish we'd gotten in at that 250, but we're just going to say, okay, if we have to pay 268, here we go. We'll give you 269. And we'll put that in our long call vertical bucket. Okay, so hopefully that'll fill there. And coming back here, if we look at this 1170, this is such a heavily traded stock. We have, a tight bid-ask spread, and we've got lots of contracts. So we get $1.30 for that. So we could do that. And we could compare them. And how many of these could we do? Well, we're risking how much? We're risking $368 or $500, the difference between the two strikes minus what we're being paid. And so the second question, and again, there's an example trading plan in that trade management mini session group. So if I take that 132 and divide it by 368, which is what we're risking, am I getting enough juice for it to be worth the squeeze? Because we're going to be in this for 30 days. So we're going to be in this for 30 days. And so we want to get at least a 30% return. Okay. So if we look at this and we say, okay, we're willing to do this. Now, some people don't like short verticals, and I'm teaching Connie's short vertical class tomorrow if you'd like to join me, but because the risk to return ratio, you tend to be, if the trade goes wrong and you take a max loss, you've just wiped out sometimes 3 or 4 profitable trades. It's often like that kind of, I'm risking 300 and something to make 100, where the risk reward ratio is a little easier for some people to wrap their brain around with a long vertical, but the long vertical is more directional. Okay, so we'll compare these two. We're going to put in an exit, and our example exit will be at 80%. When we've got 80% of our max gain, we'd like to take our risk off the table. So we're going to make that 25 cents, confirm and send. We're going to put this in our short put vertical group, and we're going to compare to the long call vertical. Okay, so that's an answer to the question, and another trade. Do you have the amount of the max loss in your account to sell a vertical? So that's a question from Beauty at its best. I have a feeling what you're asking is, is that in the example trading plan? Is that what you want to know? Because, this, if you come to, so here's my little plug for subscribing to the channel if you haven't done that already. This Trader Talks from Schwab Coaching, what comes up when you first come in is whatever is currently being taught And then if you come to playlists and come down to the trade management mini session, I haven't added to this collection. Like a couple of weeks ago we're doing these short candlestick patterns. So if you want to do some binge learning on technical analysis, come on over. But part of, like, we have a short put vertical example plan and a long call vertical example trading plan, and that includes position sizing. So in our trading a smaller account, our max loss per trade in selling in any trade, whether it's a long call, and we're going to do a long call example trade, or a long call vertical, or a short vertical, is $500. The account is up. We might go as high as 550, but we aren't going to risk 6. Okay, so that's part of our position sizing rules, and that's outlined in these example trading plans. And these are just example trading plans that provide a framework from which you can then create your own trading plan. Okay, and that's under these trade management mini sessions. Okay, so because I kind of liked, when I started, I wanted to have a recipe to follow. And a trading plan is really a recipe or a set of guidelines, and there are rules on, when you enter and all of that kind of stuff. Yeah, when you place the order, the confirmation, and you'll see it when we do the next one. So let's come and look now at ON. So ON Semiconductor, this is a tech stock. And although technology, like if we come and look at public, the S&P 500, tech has been leading, one of the leading sectors, in the last 3 months, right? When we look at the sector indices, here's the 3 months. And who's been leading the charge? Communications. What did we just place a trade on? A communication stock, followed by technology in the number 2 spot, and then consumer discretionary. Okay. So when we look at ON, it has not been like running with the rest of its peers, in that it's down 20% year to date. But what we've seen is it kind of hit this bottom back in April along with the rest of the gang, and then has come up, got hit on earnings, but we've got this pattern setting up, this big pennant pattern, and it appears to be breaking out, crossing the 30-day moving average. And this is a 100-day moving average. So it's now above the 100-day moving average as well. And so you might say, well, I don't know what degree of confidence I have that it might come all the way back up to 64, but could I do a short-term trade thinking, okay, what if I took this one ATR? And what is ATR? Well, if you want a definition of it, if you come to Edit Studies and then type in ATR, if you click on this little question mark, it will give you a whole definition that's quite detailed. But really what it is the average this stock has moved from the high of the day to the low of the day over the last 14 days. Now, I've already got this in here, so we're just going to, I've got this down here. But like over the last 14 days, we've seen this number falling, because when we had this big down day on earnings, it skewed the number higher. And so it's been kind of as this, and this number was in here for 14 days. So as we've kind of come out and it's had less influence, this number's come down. And now we're sitting at 176. So what if we said, hey, if our expectation is that this stock might continue to go up, let's put in a trade. If it goes up $1.76, we'll take the money. So if we say, okay, we're going to take the money and run, we're going to do this short-term trade, I'm going to come over to my calculator and switch this and bring up our scratch pad. We did one of these a while ago on TTD. So here's an example, one ATR target on where the one ATR is $1.76. And then our target for this is going to be today's high. Where did I write? I wrote this down ahead of time. Today's high, and if you just hover over the candle, it'll give you today's high, $50.34 plus $1.76. So our target's going to be 52.10. And then our exit is going to be today's low, which is 49.20. I can type honest, I can, minus $1.76. So if it goes up by one ATR, we're happy campers. And if we're down by one ATR, the trader wants to lick their wounds and live to trade another day. Okay, so, and what are we going to do here? We're going to buy a call. Now, this is a $50 stock. So could we have done this trade on Netflix? Yes. But the problem is we can't afford to buy, we can't afford to buy shares of a long call on Netflix. Remember, it was like $43 or $53. But when we come to on, it's, well, let's go to the monthlies. We want to go out at least 30 days. We're expecting to be in and out of this trade in how much time? Well, hopefully in like 1 to 5 days. This is a quick dating strategy. Like, I want to sneak up, give you a kiss, make my money and go. And so, does it trade more than 1 million shares a day? Yes. Does it have lots of volume on the options contracts we're looking at? Yes. Why do I care? Because when I want to sell this, I want to be able to get out lickety split. Like, and if there's 1 or 2 contracts, then it's going to be the market maker, and he's going to want his pound of flesh, in the form of a wider bid-ask spread. In this, like, I'd like it to be pennies. It's 8 cents, but that's still comfortably under 10%. So we're going to look at buying. How many of these could we buy? Well, if we buy 4, how much are we risking? Because we could lose the entire amount. And you're saying, well, but Barb, like, I'm putting in an exit, so I don't plan on losing the entire amount. No one ever plans on losing the entire amount. But could it happen? It could happen. And so what are we doing? We're trading with an abundance of caution because we have our little heap and we're trying to grow it, maybe generate some income from it or whatever, but we don't want it to get annihilated. And so even though we're saying, well, I think if the trade went wrong, we'd still get 50%, we wouldn't lose more than 50%. So we're going to trade twice as many. If this were bad news came out and it gapped down, or the market just gaps down in general, and this goes with it, we'd rather, some traders might choose to be more cautious. Okay, so how much are we risking here? If I come to confirm and send, this is our order confirmation. It says, this is how much we could lose. The entire amount we're investing. How much could we make? Well, it's saying it's infinite, but really what we're going to do is we are going to put in an opposite order, and we are going to make it a market order that is good till canceled. And so this is just another way of creating an OCO order. And what this does is it brings up this little conditional order sheet, and I always put in target first, like creature of habit. Do a long division race with someone if you remember how to do that. And, if you don't do things the same way every time, you're slower and more prone to error, some might argue. So our target is to get out if it goes above 52.10 or below 47.44. Okay. So we're going to save that. And then when we come to confirm and send, we want to be sure we got this right. So above 52.10, yep. Below 47.44, yep. Now, you might be saying to yourself, well, that's not a very big move. We're going to put in here that this is a 1 ATR target. Okay. Hit send. So you might be saying to yourself, I wonder how much I might make on that trade if it goes my way, or maybe if it doesn't. Like, what could I make? What could I lose? So if you come up here, and I'm just going to point out, we're on the trade tab. We're coming down to the option chain because this was one of the times I called the trade desk because I couldn't remember where to find this. I thought it was the coolest thing since sliced bread. But we're going to come to Theo price. The first thing we do when we click on it is hit reset. Okay, so it's saying, okay, today is the 17th. What if it went up and hit our target by Friday? And this just will give you a ballpark. If it doesn't hit our target till next Wednesday, even if it goes up and hits our target, it could be quite different. So we're going to put in $1.90. Oh, and there needs to be a plus sign in front of that. So we're adding our, okay. I guess I have to go back, plus $1.90. So, and then when I hit enter, it says, okay, that's 52.19. Our target's 52.10. So that would get us where we wanted to go. So 125, let's say we paid $1.30 to get in, we'd be up about 56 cents. If you said, okay, if we're up 56 cents, let's switch our gadget to our calculator. So 56 cents divided by $1.30, that'd be about a 43% return. Now, who knows where volatility can be? That's going to impact the price. If we hold this option over the weekend, time decay keeps clicking away. So, that's a factor also. Okay, now what if, because it's important that we understand the downside, what if it goes down to 47.44? So what's that, down about $3? So minus 3, that's 47.40. So that would have hit our exit. Well, this would be worth about 54 cents. So if I take 54 divided by $1.30, that's 41%. So we'd have 41% of the value left. We'd be down about 59% on this. And so, it cuts both ways. Like, one of the beautiful things about options is that, you've got leverage. One of the terrifying things about options, you've got leverage. Yeah. Somebody's saying, well, why not do a buy right? Well, you could, but that's a longer term investment. And if you're saying, yeah, I'm a little nervous that this has been an outlier and, not doing so hot. But, I like the way you're thinking because our implied volatility is high here. It's a $50 stock, so it's in our snack bracket. We're the premium here is about 2% on the the money strike, because these are $5 wide, which is pretty wide. I bet if we go to the weeklies, they'll be $1. Yeah, they are. So if you came out 3 weeks and did a buy right, and, if you wanted to do an example, we could, and say, hey, even if this doesn't go up much, even if it just goes up to $51, they'll give me $2.30. Like, you're paid typically the mark. So if we look at this, in Thinkorswim speak, this is called buying covered stock. So if we could make $2.90, which is $51 minus 48.10. So if we could make $2.90 on a $48.10, I'm just rounding, investment, that's a 6% return. But now we're in this trade, you know, and it only has to go up by 55 cents and we could be called out. Now, you're never going to be called out early in paper money, but you could be called out in a live account. So if this really went up dramatically in a live account, you could be called out early. And then what would that lead to? Well, that would lead to doing the happy dance, right? Because now you've got your money back and you've got your max gain and you were willing to be in it for 23 days and now you're out of it in, 5 or, 10 or whatever. Yeah. So somebody's saying, well, you've got no downside protection. And you're absolutely correct, George, if we do this and don't put in a stop. But what if we came in, we said, well, look, this looks like a pretty solid support line. Doesn't mean it will hold. But if I look at this diagonal line here as a support level, and I said, okay, that's around 48.82. And so if I get my little calculator out and say 48.82, if I take 3% off that and go multiply it by 0.97. So if I say, well, I think this might hold, but if it doesn't, let's buy this back. If it breaks through this and doesn't break to the upside, ends up breaking down to the downside, not going in the right direction. So I am going to exit. So if we come to first trigger sequence, right click, create an opposite order. I'm going to make this a market order. Why am I making it a market order? Well, I'm going to make it a market order because I don't know what this $51 strike is going to be worth. If I get stopped out at 47.35, my assumption is it's going to be lower, but volatility is going to be higher. So we don't quite know. So I'm going to click my disappearing, reappearing conditional order summoning sprocket and come up to on and say, hey, if on goes below 47.35, I'm out. Now, does this guarantee we're going to get out at exactly that price? No, but that's why it's important that we pick stocks that trade high volumes and that have tight bid-ask spreads and where the options are heavily traded. So the probability is higher that we'll be able to exit the position at close to the price we're requesting to get out. Now, if it gaps down, well, all bets are off. And so some might say, well, hey, like when is the next earnings? Well, we just had earnings in August, so September, October. We probably won't have the next earnings till the beginning of November. And some might make that part of their example trading plan that they don't want to trade this buy right strategy over earnings. Also, they don't, that might be part of your example trading plan for short verticals. Now, other people will trade short verticals as a strategy because, volatility raises the price of the options, and then they're looking to take advantage of volatility crush. But that volatility goes up for a reason. That risk is real, and if it breaks your way, you're a happy camper. You could throw your shoulder out for patting yourself on the back. But if it goes wrong, then you're looking at max loss, which again, on a short vertical, can be pretty humbling. And so we're going to put in our buy rights. And we're going to compare this to our long call with the 1 ATR target. So I like your questions. This, isn't exactly the 4 trades and the 4 different trades that I was thinking of when I started this class today, but we've done 4 different trades on 2 stocks. And again, you want to read these notes at the bottoms. With stop orders, no guarantee you're going to get out at the price. This is a weekly option series. We know that because we didn't want to do a $5 wide spread. Like we wanted to be able to it only has to go up by 55 cents, 50 some cents for us to reach our target. So that's that one. AP 514 is talking about after hours gaps. If you're not set up for after hours trading, it won't fill in the after hours. But if it gaps down and opens lower the next morning, you'd be out at the lower price in the morning. Yeah. Yep. So, but we've seen, when we look at on, how much does this stock move in an average day? Well, if it moves, it's moved, $1.77, we only need it to move, 50 cents in 30 days. So that's not a huge stretch. And for our one ATR trade, it only has to move up $1.77 above today's high, and we're out. Kind of Bob's your uncle. Now if it goes down, and it could go down, like, we're out. Somebody asked me who Bob was, and it's just an expression I've used for years. I finally looked it up, and Bob actually, there was a member of parliament named Bob in England, and he got his nephew a really cushy job. And so people would say to him, like, oh, easy for you, Bob's your uncle. And it just became an expression, kind of easy peasy, lemon squeezy, Bob's your uncle. So there you go. So here's our target for this. Our target is 52.10. So if you want to look at your charts and be able to see it, you just draw a line, and then you can just write on here ATR target and make your target price the value 52.10. And then as a default, I say show the price on the right. And then when I want my label to show up, I say, yeah, show that on the right too. And so now I can see what we're aiming for. So if it gets up to like 51.99, and then we get this candle of indecision saying, hey, this uptrend may be, about to reverse, might we exit the trade? Yes, absolutely. Okay, so you may be wondering, okay, so she said these weren't the trades that, all the trades she was going to place. What is she not telling us about? Well, we don't have time to do more today, but, if we did have unlimited time, might we look at JP Morgan, which has been on this nice uptrend low these many months, part of the financial sector also, which has been strong. Like if we look at financials, I mean, not as strong as communications, but not too shabby. But could we have looked at a short put vertical there, kind of coming back, to that 300 level, where we had support that it hit a couple of times at kind of a conservative target? Could we get enough? And then we have to look at, well, we'd have to be out before the 14th. So could we place a trade where we were out on the 10th? Or could we look at something like American Express, which also has been uptrending, had a bit of a pullback, quite not, maybe not exactly a cup and handle pattern, but kind of cup and handle-ish. Here's the cup, here's the handle, here's the breakout. But this is a live candle. It could be back tucked underneath by the end of the day. But if we do see this breakout and retest, could we, look at a long call vertical or something like that? The same with Hood, and could we look at a conditional order, with a one ATR target or a swing type trade up to a previous high? Well, we could do, we can do whatever we want. So there you go. Anyway, guys, we have to wrap. We did place 4 trades today. So we did kind of 2 pairs of trades. I feel like Nixon here. On Netflix, we did a long call vertical and then a short put vertical. And then on Semiconductor, ticker symbol ON, we did a long call with a 1 ATR target. And then based on our questions, we also did a buy right covered call. So that's our 4 trades for today. Peace be with you. Yes, and I will be in Dallas this weekend. If you are in Dallas with Kevin and Ben and I and the cast of thousands, please come up and introduce yourselves. Maybe we can take a picture together or whatever. It would be great. It would be great to meet you. Please don't forget to follow us on X, Barb Armstrong CS and Kevin Horner CS. Kevin has reposted, there's a survey in the chat. My commitment to you is if you fill it out, I will read each and every comment. The deal with that survey is there are 2 questions. So one hand, 2 questions. 1 means I hated it, 10 means I loved it, and there's everything in between. And then you have the ability to put comments in. So if there are topics you'd like me to see me come up with in future classes, just ask, and we can cover that. If you hit the like button, it lets Kevin and I know you found this valuable. Sounds like applause to us, but more importantly, it moves this up in the YouTube algorithm so more people can find this content. So if you haven't done a random act of kindness for someone you don't know yet today, here's your chance. It's like easy peasy. Hit the like button. Okay, so that's a wrap. Lots of great stuff still to come. So stay tuned for what's coming up next. And we'll see you in Short Verticals tomorrow. Connie has a well-deserved day off, and I will be filling in. Take care, everyone. Bye for now.